Welcome to Subject to Finance, the podcast that keeps agents up with what's going on in the world of finance. So this week we've seen a few things happening. One of the biggest things to look at this week is that we've seen ANZ, the largest bank in the New Zealand market, come out with a fraction of a drop in its rates. And why is this important? I think it's just more around the indication of what we're going to expect to see over the next little while in the interest rate field. In our role as mortgage brokers, what we tend to be looking at is the rate curve and what that trend looks like. And we look at that through 1, 2, 3, 4, 5 years to give us an indication of where the market's going. Obviously that 5-year being the horizon. And at the moment that rate curve goes down from 1 to 5. So it's a general decline that's expected in terms of interest rates. So really interesting this week with ANZ coming out to drop its 1-year rate from 6.84 down to 6.79, its 18-month rate down from 6.65 to 6.55, and its 2-year rate down from 6.39 to 6.35. And you might say it's only a small drop, but it just gives us a bit of an indication as to where the market's going. ANZ's the largest lender in the market, and it's often a leader on things like rates, so it's really important to watch it. ANZ has also come out this week and said that after the 1st of July, it's going to ease back on the cash incentives that it's giving to new home borrowers that are coming on board the ANZ brand. And I guess that's a little bit of an indication that the market competitiveness is changing. Other news: Westpac, after shutting the door in terms of lending to the over 80% range, that's people with deposits of less than 20, has just opened that door back up again this week. It's a space they haven't been in for many months, so it's interesting to see. They've got some appetite for the lower deposit end of the market. So that is an offer that's for new and existing customers, but an offer that's there for people that have already got a property. So it's not just there for those that are looking to get pre-approvals in place to start that property search. It's those that have either own or have a sale and purchase agreement with an address ready to go. So from an agent point of view, customers that you've got settling those new home purchases over the next month or so could be fitting into that Westpac bucket if they're a low deposit customer. We've seen a lot of narration by the Reserve Bank and a lot of control around loan to value ratios in the last year, and just recently they came out to confirm that they were opening those up a little bit in terms of giving banks leeway to do over 80. And also investor buyers that are buying investment properties to be able to borrow up to 65% of the loan value. That has now come through, and we're seeing it actually being actioned by the banks. And so it's good to know that potentially for those investor buyers that are looking to buy a residential investment property, that they can borrow with as little as 35% for those now. It's also good to remind you, I think, that if those businesses are buying new build or off plan, they are in a position to borrow up to 80% and sometimes 90% if it's off the plan. So just a reminder that there's different criteria for new build, and the reason for that that difference in criteria between investors buying an existing property and a new build is it's an incentive for developers to develop and investors to buy new rather than existing stock. So yeah, that's an opportunity for investors at the moment. The market over the last few months has seemed fairly dominated by first home buyers. I don't think that's changing too much, but we've seen some indication in the last week or so that there's a little bit more volume coming through in terms of those buying new homes, which is people that already own a home that are trading up or moving or doing something, and generally refinancing. So it's nice to see a little bit more movement in that space. It sort of gives us a feeling that the market is a little bit more live than it has been for the first 6 months. but it's still a great time for first home buyers to be getting in there. So as agents, when you're talking to those first home buyer clients, are they going to get better? We're definitely at the top of the rate cycle. We're definitely somewhere near the bottom of the valuation cycle. So, when you're buying a home, it's all about first home, not dream home for those people, and getting into the market is really important. And this is probably as good a time as they're going to see for a while. The only other piece of news this week, it's not so much of an agent discussion or a lead thing, but it's a good piece of news, or an interesting piece of news for the finance market, is that we're seeing the exit of HSBC out of our market. What does that mean? I think this week customers of HSBC have received letters to say that when their home loan rolls over at the next fixed rate roll-off date, they'll roll to floating. So we expect to see most of those clients moving fairly quickly off into other banks over the next few months. So I think that's about it for Subject to Finance this Monday. As I say, it's a brand new podcast, and I mentioned last week that over time we'd like to get more and more feedback from you as agents as to what your questions are. Feel free to reach out and send an email through to hello@teller, and we'll get those questions answered in the podcast next week. Here's to a good week ahead, and talk to you soon.